Market Spotlight webcast series. Today's conference will start in a moment. The WFS is dedicated to educating technology leaders through webcasts like these and the Growth and Exit Strategies Conference Series held in London, New York, Silicon Valley, and other tech and financial centers around the world. The speakers and sponsors of these live events read like a who's who of industry leaders. To learn more about our live events for CEOs, owners, and investors, or to access our library of on-demand spotlight webcasts covering markets like IT security, health tech, gaming, and more, please visit WFS.com. And now, let's join today's Market Spotlight webcast.
Hello, everyone. This is Joel Espelin, President of the Quorum Group, and I'm very happy to be with you today to host this WFS Market Spotlight on the Agtech sector. This is a fast-evolving space with a ton of M&A activity happening, so let's get right to our agenda. We're going to start off with a research report from Elon Gasper, EVP of Research and Technology at the Quorum Group. We're then fortunate to have Corbett Cull, a good friend and serial entrepreneur in the Agtech space, join us for an in-depth conversation about both his experience and his views about Agtech M&A. If we have time at the end, as always, we're happy to take questions or feel free to follow up afterwards via email. Before I turn things over to Elon, I also wanted to share just a few photos from our recent client closing celebration trip to Langara Island, Canada on the Gulf of Alaska. This is truly a once-in-a-lifetime adventure, and it was fantastic to be able to share it with representatives from 4 of our recent clients. I hope to see some of you listening up in Langara soon as well. And with that, to our research. Elon?
Thanks, Joel. Since prehistoric times, technology's impact on agriculture has been the prime enabler of humanity's progress. Atop the trend most recently are hundreds of tech companies riding a massive digitization trend, enabling an emerging generation of precision agriculture startups amid a season of change with a surge of interest from farmers, funders, and M&A buyers seeking strategic growth across all aspects of the ag-tech market. The resulting waves of M&A, even serial bolt-ons by previously acquired companies like Monsanto's Climate Corp, are disrupting the traditional agriculture landscape, reshuffling the opportunities, and entailing demand for related technologies against a backdrop of monster mega deals, such as the 2016 acquisition of Monsanto itself by Bayer, as some of the largest and oldest companies in the world strive to assemble the mega platforms of the future, while simultaneously the greater agriculture-related market undergoes immense consolidation itself, as witnessed the combination of Dow with DuPont last year and Canadian fertilizer empires Potash and Agrium this year. Underlying customer demand shows current interest in farm management software outpacing frontier sectors such as robotics, IoT, and data analytics. In order to realize benefits born from the most advanced digital tech, there first has to be foundational software in place, a digital gathering point for all that newly captured data. In that vein, we saw Monsanto competitor Syngenta acquire Ag Connections back in 2015. As in many early deals, the seller and buyer had a lengthy pre-existing relationship, in this case 14 years of working together, with Syngenta itself then absorbed the next year into ChemChina, the state-owned chemical company in China's biggest ever outbound M&A transaction. More recently, in the data analytics sector, BASF acquired digital agricultural intelligence specialist ZX, again after working together for years before the deal came to fruition, including on data models to benefit growers based on environmental conditions. As the pace picked up last year, EFC Systems acquired AgSolver to form a new agronomic planning and sustainability division. AgSolver's agricultural software includes analytics systems to identify alternative management techniques for infertile or unprofitable acreage. In one of the larger deals we've seen, Blue River, a machine learning and robotics powerhouse out of Silicon Valley, was acquired by John Deere for $305 million to automate a number of crop-specific tasks. Another Silicon Valley company, Trimble, was the acquirer in this notable deal for Muller Electronique, developer of a unifying hub and control terminal for a variety of machines and tools, regardless of the manufacturer. The variety in this M&A sector was illustrated by Ritchie Brothers Auctioneers' acquisition of Mascus, an online marketplace for used equipment. Synergies driving this $30 million-plus deal include internet tech for Ritchie and extended reach for Mascus's listings. The Agtech market continued accelerating this year, even more so this last few months, as among a summer crop of savvy Agtech solutions, IoT data integrator OnFarm was nabbed by irrigation management firm Swim System to ease water regulation compliance. Agronomic data management startup Agribul was picked up for $63 million by Nutrien, that combined potash and agrium fertilizer giant, in its first software acquisition. Soil health and conservation planning software provider Agrin was harvested by Land O'Lakes. Then last month, tech M&A in the drone systems sector took off as Canadian data analytics company Veritas was picked up by drones-as-a-service company Deveron, which should be able to leverage Deveron's drone imagery into its precision agriculture services customer base. Also last month, dairy supply chain expert Dairy.com acquired Wisconsin-based data specialists for its full-stack ERP milk management systems in plants traceability. And just this month, we saw a buyer from India as Jain Irrigation Systems paid $20 million for cloud-based smart irrigation systems developer ET Water in California's Central Valley. Things are moving fast out there in the fields. Back to you, Joel.
Thanks, Elon. Wow. It is amazing to see the level of activity in this space, and it's still early days. Before we bring in Corbett, I just wanted to make one quick point, and that is that M&A has already had a huge impact on the ag tech landscape. As someone who has been in and around the technology industry for a long time now, I believe it is always important to watch for the emergence of platforms as a new technology sector matures. In the consumer internet space today, this process has resulted in the FANG companies, Facebook, Apple, Amazon, Netflix, and Google, aka Alphabet. Which companies represent the FANG of AgTech? I think we already have an idea. Monsanto, through its acquisition of the Climate Corporation, John Deere, through its purchase of Blue River, and DuPont, by picking up Granular, are prototypical examples of how large non-tech companies are increasingly transforming themselves into technology platforms through the intelligent use of M&A. Well, enough for me. It's my distinct pleasure to welcome Corbett Cull to the program. Corbett is founder and former CEO of 640 Labs, former executive at the Climate Corporation, current board member at Ag Eagle, and most recently, founder and CEO of a new ag tech startup called Tillable. Corbett, welcome.
Thanks, Joel. It's great to be on here and be able to talk about one of my favorite topics in digital agriculture and the influence of technology in this space.
No, absolutely. And by way of full disclosure for those on the call, Corbett and I go way back. We were co-workers for over a decade at Packet Video, our former common employer, back in the 90s and 2000s, and then also in subsequent adventures. So what I'd like to start with, Corbett, just to kind of set the foundation for folks and so folks sort of also understand, the experience and credibility that you bring to our topic today, would be to have you very briefly give us a summary of the 640 Labs story. What was 640 Labs? What happened along that journey? And where did it finally go?
Sure. So I ended up getting introduced to agriculture by a mutual close friend of ours, Craig Rupp. Craig grew up on a farm in northwest Iowa, also for a short period of time worked at John Deere. And one day, Craig and I were talking, and Craig was like, hey, I think we should go and do something in agriculture. With our backgrounds in, cell phones and satellite communications, et cetera, we could potentially make a pretty big impact on agriculture. So it was in late 2012, but early 2013 that we got started with 640 Labs. And our goal with 640 Labs was really to help automate the collection of data from agricultural machinery. So whether it's tractors or sprayers or combines, what would be the easiest way to record data from that equipment, analyze the data, visualize the data, and then hopefully help the farmers become more productive by providing analytics and insight into how they are performing as a farmer. As a result of that, we ended up developing a product called the 640 Drive, which was a small device that plugs into the CAN bus of tractors or combines, and that data would listen to the CAN bus, listen to everything that's taking place on the tractor or the combine or the sprayer, but most importantly, record the agronomic data that's taking place on the equipment, what seeds are being planted, what chemical is being applied, or in the case of combine, what the yield is in the particular field that the combine is operating.
So it really was a vertical IoT plus big data play. Is that fair?
Yeah, we were probably IoT before IoT was even a thing. But yeah, we made the conscious decision to focus only on agriculture. And Joel, I'll be honest with you, many people said, hey, why don't you look at mining or construction or forestry equipment? But we kept a laser focus on agriculture because we felt like it was a big market and it would require a lot of insight into how the market works in order for us to be successful.
Well, good on you. I think we've seen that vertical focus within IoT has really been what separated the successful startups and ventures from those that haven't really made it. Again, by way of full disclosure, I was fortunate enough, you were nice enough to have me as a board member of 640 Labs along the way. So I want to fast forward a little bit, but touch on a couple of key points and help fill in some history for me even though I was there, Corbett. Two things. One, how did you first meet the guys from the Climate Corp, which is part of Monsanto?
I had an introduction to one of the people in Monsanto Ventures just through networking, let's say, and that person at Monsanto Ventures said, hey, the team at Climate Corp would like to talk to you. So I think it was probably sometime early 2014, we had our first introductory conversation. It was a good example of there's no such thing as a bad meeting or a bad conversation. They were trying to find out a little bit about 640 Labs, and we were trying to find out a little bit about Climate Corporation. Joel, if you remember, we were very active not only in pursuing farmers as customers, but very active in business development and talking to the various, big players out there to understand if 640 Labs could potentially help them with some of the challenges that they were facing.
Well, and earlier in our research section, we talked about kind of the importance of that original climate acquisition by Monsanto as kind of a cornerstone deal for this resurgence, if you will, of Agtech, VC investment, and startup activity. But maybe for those folks who aren't totally familiar, Corbett, maybe you could provide a brief thumbnail of sort of what does climate do, and how did it become part of Monsanto?
Sure. So Climate Corporation was acquired by Monsanto in the fall of 2013, somewhere in the neighborhood of $900 million to $1 billion. What Climate Corporation originally started out doing was a form of crop insurance, but they're really a big data analytics company focused on agriculture. And the acquisition by Monsanto was really Monsanto's belief that digital agriculture would be that next leap in productivity for growers, and that they needed a digital platform like Climate in order to be able to fulfill the promise and the vision of where digital agriculture is headed.
Makes perfect sense. So let's jump back to the 640 story. I know folks want to hear this, one of the interesting small exits in this space. Where I want to jump back to that story very briefly, Corbett, is, you had a choice between raising a Series A and finding a partner. Talk to us as an entrepreneur. How did you think about that choice between raising VC and the M&A route?
It's always a tough decision at any point along the life cycle of a startup or a company. Do you take the exit or do you go on your own? One of the things that, really weighed on us pretty heavily was that we knew having a very strong sales force was going to become important in order for a product like the 640 drive and what we were developing at 640 Labs to be successful. So it really came down to our decision to want to do whatever we could to make the product successful in the market. And arguably Monsanto and also Climate Corporation has one of the best sales forces in all of agriculture. So being able to take a product like 640 Labs with the drive and being able to tap into a sales force like what Monsanto has, we really felt like that was going to allow us to accelerate our growth, accelerate the penetration of the product in the marketplace.
Well, and I want to come back to that in a moment, Corbett, because previously I think that bet has absolutely paid off. But before we get to that, obviously we certainly live in the world of M&A, so I want to make sure we don't jump over that interesting journey. You had mentioned that 640 was involved in biz dev activities and for a small startup had talked to some big players. Talk us through a little bit some of the big giant companies that you had dialogue with at that time, and how did that process unfold that ultimately led to a deal with Climate?
Even before you actually even get into any kind of acquisition talks, right? I mean, you're really always looking at partnership opportunities, and can a small company like, let's say, 640 Labs potentially partner up with a larger agricultural company. So you can pretty much name any company out there. We had some level of conversations with them to see if there were partnership opportunities. So whether it's John Deere or Dow DuPont, et cetera, constantly out there on the business development side. In the case of Climate, the day just came when they said, hey, we think you'd be a great addition to the team. Would you entertain an acquisition? And that really kicked off the conversations around what it would mean for 640 Labs to become part of Monsanto and the Climate Corporation. And then, the typical acquisition process kind of kicks in.
Corbett, sure there's some first-time Agtech entrepreneurs on the call. Any lessons learned from that process from your side in terms of particularly going through that process with really a truly giant company, ultimately Monsanto, on the other side of the table, not just Climate? Any lessons learned that you would share with fellow entrepreneurs?
Some of the things that I think we did right, obviously we had the assistance of a large reputable law firm in Chicago work with us, very early on in the process. That was extremely helpful. Joel, I would say you kind of operated in large part as our board member / investment banker, and we always had, I think, a strong team at the table. It was never or rarely just me in those early meetings. We always tried to take a team approach. I think we did that right. I would say one of the things that I learned from the acquisition process is once you get into those conversations, you need to be extremely well prepared and organized, because the level of effort to successfully negotiate and come to terms is tremendous. And on the part of the CEO or just the executive team, it is going to take a great deal of time. So you're going to need a team that can keep the operations of the company moving forward as you're going through this process, because, for the CEO, CTO, COO, it's going to be all-consuming. You really need a strong team behind that executive team to keep the company running while you're going through the acquisition process.
Oh, absolutely. Obviously that deal closed in 2014. What was life like after the deal? How did the integration go? Just sort of in broad brush terms, what were some interesting pieces of that post-deal period for you?
Well, one of the things that as we were going through the process that I feel like we started to get comfortable with was the culture at Climate Corporation, and to a lesser extent the culture at Monsanto. Here's a company that had made a big bet on digital agriculture. They had a very strong software engineering team. Climate Corporation was and is headquartered out of San Francisco. So culturally, it was a good fit for us. I think we've shared a lot of the same principles around how software should be developed, and it was very much of a startup culture at Climate inside of this larger entity of Monsanto. So I guess another thing that I feel like we did right was we saw that it was going to be a good culture fit, and, post-close it was. The product has done extremely well in the market since acquisition. It's on tens of thousands of farms in the U.S. and really throughout the world and over tens of millions of acres. Today, it's arguably one of the most successful technology products in agriculture. So it was a successful acquisition. I think one of the things that helps is when you have the buy-in of the rest of the exec team of the company that's being acquired to make sure that integration goes successfully and that they're professionals and they want to make sure that the product is successful in the market. You really have to put a lot of, I don't know if I would call it selfish behaviors or whatever behind you after you get acquired. You're part of a larger team, you're fulfilling a larger mission, and you have to stay very focused on what's best for the product and what's best for the customer.
Very well said, Corbett, and certainly in the visits that I had to the climate office there in Chicago, it seemed like folks did a great job keeping the team engaged and involved in growing that team. That's also great to see. Obviously, in the context of Monsanto, the next thing folks will be wondering about, Corbett, obviously was the Monsanto-Bayer deal. Certainly, you had a very interesting kind of insider seat to that whole drama. Obviously, that was a mega deal. But a couple of things that I think would be interesting for folks to hear about who maybe haven't been on the inside of those big public deals was some of the regulatory restrictions or Chinese walls, if you will, that were involved there, as well as what was needed in terms of closing that deal. What could you share with us about how all that played out?
I think it was extremely well communicated, both internally and externally, that the deal would have to go through a lot of regulatory approval. There were certain assets on both sides that had to be divested. The companies had to operate independently. And again, as I said earlier, the execs at Monsanto did a great job of making sure that both Monsanto and Climate stayed very focused on the job to be done, which is, service the customers. From a regulatory standpoint, I think what was interesting is just certain assets between the two companies had overlap, and to gain regulatory approval, those assets had to be divested. So Bayer had a division that was working on digital agriculture. That asset, I believe, was sold off to BASF, and Bayer's digital agriculture platform moving forward is going to be Climate Corporation. So, it was interesting, and although I'm no longer at Climate, it appears that Climate's doing extremely well and coming off of a very successful Farm Progress show. It was very interesting to be there as this was all unfolding.
On that point, Corbett, I guess congratulations are in order for folks listening as during this. As you just said, you are formally now out of Climate Corp. You've done your duty, as many entrepreneurs do. So roughly how many years did you spend at Climate post-deal? And, anything you could share with us about that decision to move on?
I stayed at Climate Corporation for about 3.5 years after the acquisition, and it really just came down for me, personally, knowing that I would like to either start up another company or participate in another startup, probably in agriculture. So really the decision was just understanding what makes me tick and what makes me happiest is working in a smaller organization, working on some new technology and building up a team. That's really what gets me excited. I've got a lot of friends that are still working at a Climate Corporation, and who knows, maybe there will even be an opportunity for me to partner with Climate on something in the future that I work on.
It's a great lesson. It appears you've left on really good terms. Certainly in terms of getting that startup bug, Corbett, I think you share that with a lot of entrepreneurs, certainly that we deal with. And it is a really exciting time in ag tech. So to shift gears a little bit, and now that we've established that you're sort of out free, maybe we'll go back and ask you about a few of those deals that we talked about during the research section. It does appear, Corbett, that sort of the floodgates have opened in terms of what you see. It's interesting for you, as I feel like one of the early Agtech entrepreneurs. What do you think about some of these subsequent deals that have been done? Obviously, Granular, Blue River, Agrible, Vital Fields, certainly others that could be named. What sort of has just been your thoughts as you've seen this, certainly the Agtech M&A space mature and some of these exits that have happened?
Well, I think it's natural for any of these big agriculture companies to want to build their own digital platform or digital framework. So whether it was the Granular acquisition or John Deere's Blue River acquisition, all of these old line companies are starting to figure out, hey, if we're going to be successful in the future, we have to have a platform that allows us to benefit from data analytics, machine learning, artificial intelligence. And in large part, I think Monsanto, with the acquisition of Climate, really kind of paved the way for a lot of the thinking that has evolved or gone into these other acquisitions that took place over the course of the last, 4 or 5 years.
So with that, the one thing I think that is interesting about Agtech, Corbett, and I do think you've experienced this a lot, is the sheer number of different business models that are out there, obviously, as well as we saw on some of our ecosystem slides, just all obviously the different facets of Agtech as this space has really grown and matured. But I did want to ask you, as somebody who's certainly been involved and around both at 640 and then inside Climate, how do you make sense of all of the different business models in Agtech that folks are trying? What have you seen that's sort of working or not working, and where do you think it's going?
If you go back to the original business models that were being deployed in Agtech, a lot of it was just selling software as a service basically to farmers through a per acre subscription fee. And those didn't work all that well, honestly. I think folks are starting to get away from that a bit in that it just has not really proven to be the right business model. As I look to the future and some of the stuff that I'm hearing out there as I talk to different startups, it does seem like marketplaces are starting to come into their own in agriculture. Obviously marketplaces in the mainstream internet world are very, very common, but they've been less common in agriculture. So whether it's, guys like FBN or maybe some of the other grain trading types of solutions that are on the market today in agriculture, folks are trying to come up with either a success-based business model or just more of a transactional business model that you would expect to see in more of a marketplace. So I think that is kind of an interesting trend. You'll probably start to see more success-based models over the course of the next 2-3 years where it's a natural way to get customers on the platform. Hey, if you try something and it doesn't work, it doesn't cost you anything. That is something, again, if you go back 2-3 years, nobody in agriculture was talking that way. Today, it seems like the winds are starting to shift into a marketplace or a success-based model.
That's great. To take one step back, though, Corbett, because it's a question that comes up so often, having been an IoT entrepreneur and seeing obviously where it's going today, it would be great to hear you comment briefly, though, just on the classic question of hardware. Certainly there were folks, Precision Planting and others, even Deere, folks sort of selling hardware into the Agtech space. Certainly 640 had a hardware product. Any thoughts out there in what you've seen in terms of the evolution of devices, also how young companies might think about that if they've got a hardware device?
That's a good question. I think direct monetization of hardware is difficult. I think it's really more you've got a device that's unlocking value as part of a larger service. For me personally, I'm not a huge fan of direct monetization of the hardware. Now, obviously, at a certain scale, like if you're John Deere, right, you have to make money selling tractors, although even John Deere is now, they have subscription-based models for some of their in-cab displays, et cetera. But
they're not giving away tractors for free yet, Corbett?
Not yet, although, I mean, maybe you'll see something like farming as a service here in the future. Who knows?
Well, that's great advice, Corbett. And as we move to close now, as somebody who's had a successful exit and built a successful Agtech company, is there any advice that you would provide at closing for those Agtech business owners who are on this webinar right now and trying to figure out how to grow their businesses and be successful in the space?
I think what worked well for us was obviously getting out there and talking to as many customers as you can, and in large part those customers are going to be growers or other folks in the agricultural economy, and really doing a great deal of business development with the various companies that you could potentially partner with, and realize those partners could be acquirers of your company in the future. So just try to be as outward facing as you can and stay active with business development. I think that's really kind of the key to success. You almost can't spend too much time in the cab of a tractor or a combine, talking to a grower, really understanding the problems that they're facing. It's easy to think that, technology can solve all problems. You got to get out there and talk to the customers to really understand it. The growers face some pretty serious challenges, and I think technology can solve some of those challenges, but you've got to get out there and talk to the customers. No substitute for that.
Well said, Corbett. And to give you credit, I would add two more from our side of what we see working day in and day out. And one is certainly the importance of building a strong team. I think in Agtech, there continues to be a space where strong technology and business teams that understand those grower problems and issues and use cases continue to drive significant value. I think you guys did a great job there. And then the other thing that we see and teach constantly in our courses is that you've got to know when your M&A window is open and be willing to test that market and see what's happening. So for those who are interested, definitely encourage you to reach out to me or to my other Quorum colleagues and to see what the opportunities might be around your Agtech company. Well, Corbett, I've certainly enjoyed this conversation. I've actually learned a lot. Despite all of our time together, I learn something new every time we sit and talk about this space. So thank you so much for your time and participation today. And with that, we'll close this segment. Thanks, Corbett.
Thank you, Joel.
We hope you enjoyed today's online symposium. If you have any questions not answered, please submit them to info@wfs.com. We look forward to seeing you at one of our upcoming live events in a city near you. To register for these live events, view upcoming webcast topics, or hear rebroadcasts of this or other Market Spotlight events, please go to wfs.com. Thank you for attending today's webcast.